Good evening and welcome to Legends of Water. This is the July broadcast. Today's Thursday, July 17th, episode 13 of these 1 month briefings. But if you count all the weekly ones, it's 276. We are the world's new water network and with tax advantaged investing. So let's dive right into it. First of all, of course, we have the safe harbor statements with the Regulation D, which means for accredited investors disclaimer, and the Regulation A crowdfunding disclaimer. Okay, we'll start off by a very cool excerpt of a podcast from the Edge for Tomorrow. And that is fascinating because it really tells a story about how we got into this new phase of opportunity zones with tax breaks.
Let's jump into today's episode. Today, I'm chatting with Riggs Eckelberry, CEO and chairman of the board for Water on Demand.
I want to change the world yesterday. And that really comes from I had an early career in the nonprofit space, and I landed eventually in the water industry, which is very change resistant. Eventually, we found the fulcrum, the way to change the entire industry. Because look at it this way, there's tens of thousands of water companies. Another water company, woohoo, so what? Right? You can make a living at it and it's fine work and the world needs that. But at the end of the day, how can you dramatically affect the state of our health, of the entire sanitation system, all of that? We realized that it's done with finance. Because it's finance, all of a sudden, we don't have to operate water companies. We can simply have money under management that we then put to work to purchase systems that are located at the points of use, and the people at the points of use, the clients, simply pay on the meter like they're used to. But the machine belongs to the fund. And along the way, a water company built it and they're very happy because they made money. So the water industry is happy because they get to build machines. Clients are happy because they don't have to come up with capital. And the fund is happy because it makes good returns. What is the net result of all that? I believe it's going to be a dramatic change in the water industry. Here's why. We are facing a $1 trillion unmet budget by 2035, 10 years from now, and that $1 trillion will only keep growing. In fact, we're going in the opposite direction. The federal government it has not been paying a lot, and as we know, it's going to get worse. And, I personally am not a big government guy, so I'm all on board with that. But the question is, where's the money? The centralized model being funded by government is broken. We see that happening in many sectors. I call it forced decentralization, right? Companies or users have to adopt their own solutions because the centralized solutions are breaking up. For example, energy. We know we were falling way behind China, way behind. And what's the solution? Well, literally, it's these micro nuclear reactors that are literally everywhere. As opposed to taking 25 years to build one giant nuclear reactor, you can have a bunch of these built in a few years. So you can just distribute them, right? I saw a model of one by the Department of Energy where they created a mini reactor that looks about like a traffic control box, and it services all the energy needs for 10 houses. Boom, that's it. Well, you just put a bunch of them in place and you've solved your problem. Similarly, in public transportation, we can't seem to get our act together with high-speed rail or whatever, but that's okay because we're going to have robotaxi. Again, individualized solutions, right? Everything's being individualized and solved at the local level, which is great because you can move fast, right? And that's the beauty of this model is industry and agriculture, which is 90% of the water problem, is also 90% of the solution because they can treat their own water with these micro water systems that are financed through the fund, which I can talk about in a bit, and then the problem's solved. And their load just went off the municipal system. Now, I'm not saying that the municipal system has to stop. For one thing, we need clean water from the government. I don't believe in privatizing clean water because guess what? It always gets messed up. I don't think we should have private police either. I like the government to have police. So there's certain things that are just right for the government. The military is another one. Well, clean water is one of them. And they should also treat the water for consumers, residential. But we should get the industrial toxins off the system. And that will solve this $1 trillion problem.
having those type of interventions at the local level and having some controls at the local level in terms of businesses taking care of their own situation can also maybe work better hand in hand with local governments. There's a lot about localization in general that's shifting and making that look more attractive in all of the ways that you've outlined.
Jamie Dimon talks about the fact that he tries to take all the functions in JP Morgan and push it down so you empower people at the lowest possible level. Well, that makes their job interesting. And it also reduces the burden at the top and it makes decisions better. There's a great example that the US military operates very much on local initiative of the platoon commander or the soldier on the ground, whereas conventional Soviet doctrine back in the day was very centrally driven. And this makes the American soldier much more adaptive to what's going on. They have the power to get things done. I think that's become kind of the standard, which is why I say that was the old Soviet thing, because I think that's changing. Why? Because you can have these tiny devices like drones that can destroy fighter jets and tanks and you name it. And it's the most adaptable level. It's the one that can be most responsive and also the most democratic, isn't it?
Yeah. And meet the needs of the local level, of who's actually there, who's most impacted as well, oftentimes. So you dove into some really interesting facts about the changing water industry and your position in this. What factors led to you being at the center of this opportunity? How did things fall into place as they did?
Well, there's a very good book by a brilliant man, the late Clayton Christensen, who wrote a book called The Innovator's Dilemma. And in that book, he says that large, existing players resist change. Why? Because it'll break their business model, right? So he gives an example of the steam shovel being replaced by the Caterpillar diesel. Well, the steam shovel people did not want to do something that would be 1/100th of the cost. No way. Well, guess what? That made them vulnerable to the guy who was 1/100th of the cost. And here's what's interesting. Those advances often come from within the existing player, right? So he gives a whole history, for example, of the disk drive industry, which disk drives getting smaller and smaller. And each time a disk drive would be half the size, it would destroy the company that made the larger one. And it's almost comical. But the fact is that the big water is so wedded to the central utilities model because it's a giant check they get once from one customer. Thank you very much. And they're set, right? But it's not a giant check anymore. That's not how it's going to happen. It's going to happen in lots of micro checks. In a way to disrupt, you've got to be small, right? Don't be big. A couple of years ago, we were working on merging with a SPAC, a special purpose acquisition company, a blank check company, to get on the NASDAQ. And we had these vast acquisition plans because we had to then meet Wall Street's expectations. And eventually we abandoned it because, in part, it was the wrong direction for us because we would have become another conventional player. So better to be a very narrowly focused player. And as a result, what we've been doing is we've been divesting our water equipment production and going straight into finance. And this, to me, is going to make it super important to the water industry. Why? Water equipment companies are very low margin. Their net profit is 16%. You have to make more than 11% to overcome inflation and currency debasement. That means you're making really 5% a year. Well, the slightest business problem like a tariff, poof, you're toast. So it's not good to be low margin, and yet they are. Well, guess what? If we put in place this fintech model, their margins will rise, and it will become much more profitable to be in the water industry. If you're on Microsoft Office, you're paying $20 a month, let's say. You used to get it for $120 a year, forever. One time, $120, you were done. Or you even got it for free, but whatever. The point is, at one-time expense, now you're paying more. So you as a customer are paying more, and you're actually happy. Why? Because you have service, you have updates, you have all these features that are automatic. You got OneDrive and this and the Copilot, and they're all thrown in. And so it's a good deal for the customer because they get what they want when they want it. And that flows to all the players in the industry, but primarily to us, the guys who are financing it.
So you mentioned disrupting and what it takes to disrupt and, finding that sliver, right? Rather than coming in as a common player. Can you speak a little bit more to that?
I tell you, we have not been brilliant about this because you have a right idea. We started looking at different ways of financing water systems. the thing that held us back was the fact that investing in water and water equipment does not have tax benefits. Unlike solar, unlike oil and gas. I was once pitched by my CPA on investing in solar. He spent the first 20 minutes talking about the tax benefits before he even got to the part about how maybe I'll make money. Well, tax benefits, the deductions, the sheltering of your gains is hugely important when you're competing with other uses for the same dollar. We set up something a lot like oil and gas, where people make money from continuing production of the oil well, similar for a water well, quote unquote, fine. But the rewards weren't there from the taxation system. Finally, this year, we solved it. It came in the shape of these very interesting things, which you're going to hear a lot more about, called opportunity zones. They've been around since 2018. Opportunity zones, there's 8,000 of them roughly, located all over the US in disadvantaged areas. And by the way, many of them today are not disadvantaged anymore because of this program. What it promised was if you kept your money in an OZ, Opportunity Zone Fund, for 10 years, your gains at the end of the 10 years would be totally tax-free. Thank you very much. But the reason why we didn't use it at the time was because it was mostly devoted to commercial real estate. And that would be the investment in that opportunity zone, and it worked very well, except for one small problem. Commercial real estate is not a great investment today, and the office sector is still screwed up, and it's going to be for a long time. So what's happened is opportunity zones have now diversified, and you can run any business through an opportunity zone, and the investors get their growth tax-free. So we latched onto that so fast. We're like, yes. And we started we had a lot of metal bending businesses. And the problem with metal bending business is you're competing with other metal bending businesses. So we said, you know what? We're divesting all that good stuff. And we are instead going to finance. And that way we're not competing with the metal benders, right?
Yes, absolutely. It's an understatement to say that it's difficult to completely transition, but that's got to say something about your team.
Well, first of all, they are accustomed to pivoting. I mean, because I believe very strongly in pivoting. It's been said before that there's a sunk cost fallacy, right? If you pursue sunk costs, like, well, I've already spent this much on this, then I got to keep going, right? Well, I used to be in shipping. I was a ship captain at one time, and if you go off course and you persist in going off course, you're going to end up even more off course. And so at some point you have to go, okay, I screwed up. I'm going back on course, and fine, I wasted time going off course, but you got to just stop the bad habit. And that's something that we do a lot in business. We try and sort of keep going what we've nurtured so hard, and the willingness to just break something off. It's really, really hard. So you got to be willing to just go, that's it. We're breaking with the old, and here's why. And my team, they think a lot like me. So they're like, okay, bring it.
So the first companies that you're helping, you've identified them as being the businesses that need to do it first. So who are those companies and why do they need to do it?
Well, we have this inverse triangle where at the very bottom is the people who have to have it. It's the smallest audience. But even, in a multi-trillion-dollar sector, a small audience is still a lot. And these are, for example, trailer parks, RV campgrounds, housing developments that are too far from sewage plants. And what are they going to do? And so these are, there's this land boom that's been going on between Dallas and the Oklahoma border, northern Texas, and they've been building housing developments like crazy. But they got this problem. What? You're gonna build a 10-mile or 20-mile sewage pipe? They're pressurized pipes. They're not just drainage pipes. The incoming water pipe's not a problem, but the outgoing sewage pipes are typically under pressure because they have to go over hill and dale and they have toxic stuff in them. So that stuff makes it kind of creates this limit to how far you can go from a central utility. Now we've just completely liberated people. For example, one of our showcase sites is on the shores of Lake Denison. Lake Denison is literally on the Oklahoma border, and it's miles from nowhere. But there's a little 40-foot container that does all the treatment of all their black water, as they call it, their poop. Once a year, the sludge truck comes out and pumps it out, and it's fine. They're completely independent. So these are the first people. Now, the next people are those who will find it convenient or beneficial to do it. And that's a bigger audience, right? Not having to pay capital costs. But you say, well, rigs right now I can connect to the municipal and there's no capital costs. Go, yeah, but the municipal utility right now is in hyperinflation. Water and sewage rates are inflating faster than college tuition and healthcare costs. And that's because of these unmet needs, right? Well, go ahead and build your own system. Your inflation is only the cost of the parts and the service on the machine. That's it. And all of a sudden your inflation goes way, way, way down. And that's the benefit. And then the people have mentioned this as being very important is you don't have to deal with the politics of water. You're on your own, you're good. And I can do it without capital. So I go, okay, I'll do that. Sign a 20-year contract. And now I'm on the meter with a private operator. And that private operator comes in, maintains the machine, makes sure everything's fine. So basically it's no muss, no fuss. It's really the ideal thing. I didn't have to pay anything up front. And I got off this incredible inflationary curve that's been going on with the central utilities. And that's number one, but there's more because now that you're treating the water, you can reuse the water and now you're saving on incoming water, which is good for droughts, but it's also good for your wallet, right? It's money you saved. Okay, that was fantastic. Good origin story on how we got to where we are today. Now what we're going to do is a quick business update. And Ken, why don't you take it away?
There's a lot to compress into I'm going to keep it really simple, and we can have individual conversations. But things are moving at rapid speed. Just a couple of items to give you an understanding. James has been working at lightning speed, getting the Opportunity Zone Fund up. We have delivered all of our deliverables as of, I think, yesterday or day before. Yeah, there's about a dozen remaining things that they need to do. We've got some scheduled calls with them to review, company mission, all that stuff. Really, really great stuff. And this actually helps us. It's almost like a preview on how we'll be speaking to the visitors of the exchange and how they want the idea presented to them. And in my doing this, I realized, my God, we finally cracked the code. We finally broke the code on how to make water an amazing investment like all these others, right? So that was an exciting moment of self-awareness that I think I knew, but I think it was subconscious. Second thing that we did is we interviewed two CFOs. James was kind of part of one, but we interviewed a second CFO, Riggs, you did. Right. And we've got guys working on modeling. The modeling has come along beautifully. We're now informing it in real time. We're working actively with a prospective kind of a consulting engineer, someone who's worked in this industry for 30 odd years. We might be bringing him on to help us work directly. There's thousands of operators out there that immediately want financing. And he's already got the connections and contacts. So that'll be kind of an easy introduction for us. In terms of what happened in just the last few days, that's where we're at. Real exciting stuff. I think that over the next week or two, we could have the OZ Fund live. And we're going to be talking with those closed funds.
Yeah, the big thing is the opportunity zones, and this is a lot of stuff that I've learned over the last month or so, probably since our last podcast. Opportunity zones as a entity were ending at the end of 2026, which was a major factor. As of July the 4th, 2025, our One Big Beautiful Bill, opportunity zones are now a permanent fixture. They're not going away. They are now a permanent entity moving forward, which, if you think about it from an investment standpoint, you want to invest in something that you know is not going away.
Certainty is key, right?
It's a big deal. The only thing that changes is the map. The map of the 8,579 opportunity zones, if I remember that number correctly, across the US, that gets redrawn every 10 years. That makes sense. That's based on economic distress. That's based on census factors. That's, if we look at what's going on across the US just in the last week, come January the 1st, 2027, there's going to be a bunch of new areas of distress, whether it's geographic or economic, that are going to require investment. So, number one, the zones don't go away, big deal. Number two, the map gets redrawn once every 10 years, so it's stable. We know where that's going. And then, the other thing that I wanted to call out is Eazy OZ, David Silliman, who we've been working with. They've been in operation since 2018, and these are the players to work with if you want to build out a fund. And we have been working very, very closely with David and his team over the last 2 weeks or so to set up our fund. 12-step process. The amazing thing working with David's team is, of the 12 steps, there's only 3 major steps that are on us, which is get your entity set up and registered. It's done. We have a fund. Fund is registered. Government agrees we're legit. Number 2, it was a heavy lift, which was set up who we are, what we're building, what our vision is, what our investment vision is, what our fund is about, what our business plans are, et cetera, et cetera. Took a few days, but that is done. That has been sent in. And then obviously you need a bank account, and specifically a bank account that deals with opportunity zones. So that is done. We're now in the process of working with David and his team, and that's a full-blown team, to obviously review everything, review the fund documents. And I'm not going to read what's on the screen, but you can see it's a fairly methodical, step-by-step process as we go from set up an entity to file our Form D. So everything is moving beautifully. At the same time, there's a lot of other stuff that's going on in the background, and I've got notes next to me, so you'll have to forgive me, but the team told me to prepare for this meeting, so I'm an ops guy. We prepare. There's a lot more than just building a fund, right? There's the operation. So you got a fund and you've raised the money, so now what do you actually do with it? And it's not just the machines that go into the ground and actually treat the wastewater, but it's, okay, so how do you service these machines? How are they taken care of on a day-to-day basis? So one of the things I'm working very hard on is building out a network of field servicing partners, is the best way I can put it. And there are many of them out there. And I'm in active conversations with, let's call it more than 5 so far, but eventually that's going to be 50. Who are the people out there that actually look after these machines? And you think of servicing your car. They look after these machines on a monthly basis. There is a compliance piece to it, which is, if you've got a wastewater treatment plant out there, is it actually doing its job? Is it treating water to the levels that the EPA expects it to do? Can you prove that? How much is it actually treating on a day-to-day basis? What is the throughput? So there are companies out there, and I'm already working very closely with one, probably the one, who manages not only the compliance, but manages that data layer. What's being treated, how much is being treated, and then obviously pushing that information out. There is a billing layer that is required to that, which is, okay, so now you know what's being treated, you know the level of it's being treated. Now people have to get paid. People that have invested in these projects, okay, there's a financial aspect to that. There are banks that money will be owed to. That needs to be done. There is us that needs to get paid by our customers. That needs to be managed. So all the information that's coming out of these machines needs to be ingested into a software platform that is a CRM/billing platform. That is in process right now. There is the manufacturing partner network. These are the people that actually build the machines. But at the same time, they're also part of your deal discovery network. So they know what machines out there are unfunded. That's where we come into play. They also know, let me rephrase that. They're also, in many circumstances, the people that can service these machines, which brings us back to point 1, which is the field servicing. It's an ecosystem that we need to build out on the back end of building out the financial model. So, point 5 over there is, it's more than just a network of vendors, right? It's an entire model that has to work together and has to be built in parallel. It cannot be built in serial. So, I mean, I've got my hands full right now. There's no question about it.
I just want to comment because I've been in these kind of, okay, what'd you get done today? Ba-boom, 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 ba-boom. And I think we've compressed more of the actual execution side, more of the operational side of building a water as a service fund. The fact that we now have a tax-free environment, was just a bonus. I mean, we've compressed more execution and implementation of what goes on once you have the thing built, and I think we've compressed months worth of work into just the last 2 or 3 weeks. And I just wanted to compliment you, James, because you've been very, very thorough. You are prepared, right?
I appreciate that.
He
Considering
whips
I'm
out
making it up as I go along.
we do the Zoom calls. He pulls out his freaking list. I got my list. And he's banging through the list, and I'm like, okay, and then I'm trying to ask questions because I'm trying to drill down on specifics, and I realized that he's compressed months worth of work into just a couple of weeks. And there's plenty more to do, but we've done more execution in the past 2 weeks than you could have expected in a couple of months. And I'm really, really happy about that. Thank you.
Appreciate it. Thank you. Back to you, Riggs.
All right. So, well, basically, we are still talking about the OZ because, and perhaps Ken can jump in on this, he has identified this amazing animal called closed funds.
Right. We thought it was a rare animal. It's a pretty healthy breeding population, right? If you were Mutual of Omaha's Wild Kingdom. So as it's described to me by David, who is, all right. So look, just to remind our audience, those who don't know the whole origin story, I'm not going to get into that part. We've broken the code on how do you make water an amazing, exciting, and dynamic investment that people want to invest of instead of real estate or oil and gas? You provide the taxes, stupid, right? But inside the OZ exchange, so opportunity zone funds have existed for years. AJ and I sell our business for $10 million. We have a $3 million capital gain. We owe $1 million at the end of this year. I'm the Ron Paul crowd. I don't want to do that, right? So I want to find a way to defer. So my lawyer draws up a package for $10,000, and boom, you are a closed fund inside the opportunity zone structure. Great. Now what? Oh, I don't know. I just do the paperwork, right? So a year and a half now has to go. You have a year and a half to deploy your capital before you lose the the ability to defer and the ability to essentially earn all you can on that money in a total tax free. So they didn't really have this Match.com. It basically were individual. I would call them orphaned closed funds. So David's major push here is to get all of these to advertise and say, look, all of you orphaned closed funds who now have only weeks left or months left, right, to make decisions, come join the Eazy OZ exchange. Inside the exchange, it's almost like a dating service, right? These individual investors, and they're between $50,000 and $5 million. They're not gigantic institutional type funds that are going to go through 6 months of due diligence. It's more, I like the idea. It makes sense. It's competitive. Here's 20% of my portfolio. That sort of thing, right? There's tens of thousands of these orphaned funds, and Eazy OZ will be a showcase, a place where these orphaned funds are now running out of time, will have viable deal flow to look at. And I can show them one in particular that I'm particularly well-versed on talking about. But it's exciting. It's tax-free. It's got much bigger upside than anything in the real estate and oil and gas space. And it does one thing that neither of those other traditionally tax incentivized investment does. This is truly the definition of clean and green. Everything we touch by virtue of our existence, we leave better than we found it. And there is a segment of the population that may not be their total driver, but when you add that plus to the equation, I think they're going to find it extraordinarily compelling. So that's our closed funds. David's lined up about I don't know, a dozen of these things just to talk, right? Day one, when it goes live, we're going to be in front of, tens of millions of dollars of capital that is, by the way, anxious. It's running out of time. They need to make a decision. And they've looked at other deals and it didn't float their boat. I think we will.
Ken and I have been working super hard on the whole sponsorship investment side. So as you recall, the sponsorship is really the general partner in the fund, and we're letting people share that sponsorship with us. In other words, we're diluting ourselves out of it for this first one only, so that as to jumpstart the whole fund process. Now we're offering new investors not only a piece of the sponsorship, but we're doubling and tripling it. As you can see, the annual returns are pretty intense. You make 63% on your money every year, plus complimentary stock. I don't think anything on Wall Street does that much. And then all the way up to almost doubling your money every year if you're a large investor. And existing investors, our longtime loyalists, get a much, much better deal. But here's the big warning. We are expecting to cut these bonuses in half. They are not sustainable. We can't go on forever. They are used to jumpstart things. So word to the wise.
It's the idea, like the first couple of million are always the, kind of the greatest effort. You're starting from a dead stop, right? Once there is momentum, and once please understand that once we're collecting capital from closed funds, that is not giving away shares in the company.
No.
Right? That's not giving away, huge chunks of our OZ sponsorship. This first fund may very well end up being a $200 million fund.
Yep.
Right. So we would like to keep some of that as our first go around. We're willing to part with all of it if necessary, if it means we've put ourselves in a position to do the right thing and do it the right way over the course of the balance of 2025. But we don't, we want to get the first, we got a couple $1 million in the door, or at least some promised. We want to execute on that and immediately start to make this a little bit more realistic and more in line with we still want to make it the best deal in the exchange. Riggs and I will work tirelessly to make sure it's the sexiest deal in the exchange, but it doesn't have to be, it doesn't have to be an investment that laps all other investments, right? So, because that's doing what's right by the investors in the long run too.
All right. So with that, we move to solar down. Ken, this is a topic that is fascinating. On July 3rd was the very top of First Solar Inc. And what happened the day after July 3rd? Let me think. What was that?
Does it rhyme with Big Beautiful Bill?
Yeah, it was OBBA. It was like ABBA. It rhymed with ABBA.
ABBA? Dancing Queen.
Oba. Yes. First Solar. Now, why? Because, of course, the solar tax incentives are gone. And, who knew that the industry needed those tax incentives to go anywhere? The lesson is that tax incentives in this society matter. And that's why it's so important that we finally found our way to the exclusive breakthrough that we have, which is the opportunity zone tax. Remember, that's an investor gets 10 years of profits completely excluded from federal tax. And then that can be rolled over for another 10 years. The initial money gets deferrals, blah, blah, blah. But what's important is any profits on the money they put in for the whole 10 years, which can be substantial. Remember, that's roughly a 20% annual return. So now we're talking about, put another way, 13% cap rate. Nonetheless, that is an immense multiplication of returns. You basically, in 5 years, you're doubling your money. That is super important for these investors, and it's tax-free. So, word to the wise.
And the breakthrough was to be able to do this in a competitive, when we compete against the other like asset classes, it's really not even a competition. When you add the truly environmentally beneficial portion to this thing, it becomes, it becomes a clear breakaway winner in my view.
I think one of the biggest aspects that we don't want to miss on the whole solar discussion is just how impactful the legislation was. I mean, you're talking about how they were working on these tax incentives. Again, these were not permanent incentives. They were actually operating similar to opportunity zones in how they were operating for the past, 8 years? 8 years now. that these things, 7 or 8 years that these things have been operating. And now the opportunity zone, legislation in this bill is now permanent, and the short-term incentives on solar just got a lot shorter. They were supposed to remain going through, I'm checking my notes here. They were supposed to remain, I think, going through
2033?
2031.
2031. Okay.
Somewhere in that, or 2032, excuse me. They were supposed to exist through 2032, and now they're expiring at the end of this year. Like,
Yeah.
solar didn't just get hit hard and
No, it's
the
a
incentives
rug
kind of
pull.
suck. No, it's a
total
absolute rug pull. This is massively impactful for all of these companies that have been going around and trying to do these, whole solar installs, and hey, we pay for the system, you put it on your roof, kind of energy replacement deals. They're not going to be able to do that in the same way they've been doing it for the past number of years.
It's going to require a total remake of their model. And that's going to, look, I don't envy them. That's tough, right? Pivoting, the pivot dance, right? They'll have to reinvent their entire model to make it. And I don't know, how they do that. I'm sure something will come along that'll allow them to do that. But right now, if you have a clean and green attitude towards your tax incentivized returns, water becomes the only game in town. Right? It kind of replaced.
It really does. And to be more specific, so the tax credits that we're talking about were specifically for residential. The large scale projects are, again, we're supposed to be around for that same period of time, and they got cut by 60% next year. And then they're completely gone, I believe, after 2028. So they've got a couple years left to take advantage of some of these larger scale initiatives that are really what people that are investing in the space are really investing in.
Right. They're not doing
big solar farms.
Right. They're not doing, yeah.
And so that again, it's just getting really tough. So for like you said, for a company like us that's really trying to make a splash, pun intended, in the water space, and really trying to bring attention to the space because it is such a neglected, private capital space. This is the place where you can turn your sights, right? If you want to turn that investment from oil and gas into something that is going to be more productive and leave the planet, greener and better than where it is today, then this is the hot new space. This is the hot new ticket.
Capital will always find its place. And look, I tell the story. I go to London. We formulated water on demand. I got on a red eye, went to London, right? And I was essentially telling this group, it was billions of dollars for ancient money. And they loved it. People wanted so bad to invest in water. And what's the tax break? And I was like, we don't have one, but we can give you a lot of stock. And the light just went out. Because, look, in truth, I couldn't give them enough stock in a $100 million company. You can't get billions of dollars of investment in using the equity of a company that's got a $100 million market cap. So this truly was just a total game changer for us. And that's what, I've gone over and over on that, but it really was that experience in London that opened my eyes. And I said, we're going to just have to do it through brute force and sheer force of will. Well, we got a little help, right? We got a phone call one day and says, you should be part of this. And the rest is history.
Right. But I mean, in pertaining to the asset class itself, the thing that I guess I would want to make sure that people understand is that opportunity zones are no longer operating as an incentive, right? This is no longer just a, hey, let's let this help. What James was talking about with them becoming permanent, right? That cements this as a permanent asset class.
What the market wants is
permanence.
permanence.
Right.
The market wants permanence or at least certainty, right? Now it actually doesn't just have certainty, it has both. And look, I don't know how much money out there was keeping their powder dry in opportunity zone funds to see if they would be permanent or not. But knowing that they're permanent right now, that could be money that now gets directed into these things rather than finding individual projects.
I think also the businesses in the opportunity zones will start to diversify now that they're permanent.
Big time.
Yep.
Big time. Yep.
Absolutely.
And that makes it more interesting, much more interesting.
All right, let's talk about AI. This is just a quick summary. Withdrawing billions of gallons annually. Evaporative cooling guzzles water at an insane scale. Google uses this. 15,000 households per regular data center. Now their AI, which is much bigger, multiplied by all these others. Think about that. So Go ahead, Ken. Walk us through this particular thread.
Yeah, and I highly recommend anybody interested in massive water consumption as an burgeoning new opportunity in a variety of different ways to invest your money to follow Frank Curzio. So Frank Curzio has been a Wall Street guy for many, many years. And he basically said, look, I've never seen a resource consumption on this scale ever, right? So basically, it sounds like I wrote it. Holy shit. But listen, just to cool data centers, a single data center uses the same amount of water as 15,000 households. That's a town. That's a big town, right? Now, picture that with thousands of data centers. You're talking the equivalent of the water consumption of hundreds of millions of people, right? Multiply it. Meta, Microsoft, Oracle, Amazon, look, these are the biggest tech companies in the world. They almost become by default, it's necessary for them to become in a way their own private utility. Does that sound familiar?
Which is exactly what we're doing, right? We're doing private water utilities.
I was getting there. Does that sound familiar, right? And the thing is this. So this multi-trillion-dollar opportunity that we've identified in the existing infrastructure of America and around the world doesn't even count this. This is this magnifier that's unknowable. And, if the maths, this could be bigger than everything else that currently exists eventually, right? If AI continues to do what it does. But go ahead.
Well, no, I'm just saying it's a disproportionately underrepresented category because it's new. So if you look at the current water draws that happen on a yearly basis, right? It's like 40-ish% is food. It's 30-some% is energy, right? And that's just energy, but that's going to go up too. And it's like something like 5% is industrial, which also encompasses tech and other things, right? This is going to explode that percentage of draw, both in the energy sector and the data center sector.
Yeah, but I also, again, I come from the software world, and I don't think the average person understands how many servers go into a large hyperscale data center. I think there's it's 500,000 servers sitting in a large.
Yeah.
The amount of power, the amount of heat, the amount of consumption, the amount of output that goes into just a single Azure or AWS data center is astronomical. It's huge.
Right.
And that's only going to grow. We're not talking about a small building with a bunch of PCs. You're talking a warehouse
at 120 degrees inside the warehouse, right?
If it goes over, everything shuts down, right? So you've got it. So it cannot shut down, right? Yeah, exactly.
So what Frank says is, which water companies operate near data centers? Well, guess what? Anyone who wants to, and now we can finance it, right? Water utilities with regional exposure, pricing power, right? Now, we know a lot of these data centers because of the energy consumption, and it may be AI, it may be crypto mining, it may be just data centers. We know that they seek out places where Riggs and I spoke to a company. He was trying to raise capital for his companies. He was he was opening up a data center with crypto mining involved. And he said, I have to go where the energy is insanely cheap. But there was nothing he could do to avoid the water, and they were going to do immersion cooling technology, right? And that's similar to what Frank Curzio describes here, right? So when you say demand shock, the demand it can't even be imagined right now, right? So the amount of economic prosperity, the amount of jobs, the amount of building and infrastructure, this is stunning. It's mind-boggling, right? So when we say that water is the centerpiece behind the American Industrial Revolution, that's not just a slick line. It's the actual truth. And that's why it's so powerful, okay? So there's an almost unlimited opportunity for water manufacturers. If you can build a system that will recirculate and cool a data center's water need, that 1,000,000 gallons a day, if that could be reused, we're no longer drawing 1,000,000 gallons a day of fresh water and wasting it, right? But
Right.
a lot of times this evaporative technology will do that. But if you can recirc that water and reuse that, the resource drain drops dramatically. But think about the business opportunity for guys who makes those. What would the water bill be if they had to draw 1 million gallons a day and lose it and wait for it to, fall back to earth through rain? Okay, so the ability to recapture and recirculate that, it's an unbelievable business. And the fact is, all of those companies that need to build these things are going to need to build a lot of them. They're going to need to build it rapidly. And what does that mean? It means capital. We are literally entering at the, this is like Genesis stuff, right? I mean, the first book of the Bible. I mean, it's like literally, it's the dawn of creation for what we're talking about, and we're at the heart of it. So it's very exciting.
Okay, so water infrastructure plays just like small modular reactors and nuclear startups are getting a lot of attention. Okay, this is an important line, Ken. Top line.
Yes, chips, very crowded. We know that they're all beaten. The guy who makes the fastest chip this year, his stock goes crazy. Everyone else stock gets crushed, right? Power, that's already in process. That's catching a running train already. Now, you could catch it in time, okay? But the water aspect of this, nobody is investing in water on a private industrial basis, okay? It's all, when people think of water, they think of drinking water in the municipality, okay? They don't realize that's a tiny, tiny, tiny fraction of the water consumption around the world. This will be the overwhelming majority of water consumption on this planet within the decade, okay? Investing in this now could become like investing in, Ma Bell at the turn of the century.
No, the thing that I think a lot of people don't understand about data centers, and James, you were right to point it out, the scale of data centers, right? But we mentioned something like chip fabrication. People don't realize that chip fabs need extremely pure, clean water.
Yeah.
And
Yes.
they operate in extremely clean environments. So even if you're thinking, okay, well, what kind of systems can you guys finance? Right? There's nothing that stops us from financing ultrafiltration systems. There's nothing that stops us from playing in all of these spaces where previously, especially if you've been a long-time follower and investor of Water on Demand, right? You know that we focused a lot on our internal systems and the systems that we produce that primarily treat the wastewater. And the whole idea and this kind of wonderful next evolution about being able to operate within the fund and utility space is it gives us more flexibility to tackle even some of these problems. Because as Ken mentioned, even the larger evaporation models or immersion cooling that happens in data centers, all of this ultrafiltration that has to happen in chip fabs and all these things, that's just one aspect of one sector that needs water and needs water systems, right? And keeping that space supplied and actively operating is one of the things that's going to continue to drive growth and innovation within the country, but also to make sure that we're being good stewards of that water, being able to recycle it, and all of those aspects are things that people don't think enough about today, and it does make an impact on overall supplies and quality.
The need would strip mine would be the equivalent of strip mining if we weren't good stewards. So private industry wants to be good stewards. Think about this though, if you're a chip fabricator and the ability to produce that clean room level, I think it's pharmaceutical grade water. Am I right, Riggs? It's pharmaceutical,
absolutely.
okay, pharmaceutical quality water. If your ability to produce that on the spot breaks down for whatever, you're out of bit. I mean, I don't know what that costs you, but the costs are phenomenal. So the idea to place that fully financed on your business so you don't ever have to be in the water business. And the minute one of those effluents gets out of balance, right, James? A little sensor goes off. 2 guys show up. We're here to fix that. Oh, I didn't even know it was down. No, just keep keep fabricating chips. Okay. That ability to focus just on what the business does. That's manna to a business operator. And really, we're going to center an entire industry around, don't you worry about it. We've got this.
I always come at it from the angle of an operator, which is what would happen if
Right.
I didn't have that?
Right.
Would I be able to operate my business?
Right.
And then my next question to that is, what is the customer sensitivity to if I could not operate my business?
Well,
And that tells me immediately how urgent the
yeah,
problem to be solved is.
large scale shutdown, large scale chip fabs shutdowns are they run in the tens of millions of dollars a day.
But
Okay.
Ken, you and I have even talked about really small scale.
Yeah. Oh, well, that puts them
someone out.
They can't survive. Right.
You cannot be out of business for 3 days.
No.
Right?
No.
Yeah.
No. These guys run on a margin, and any imbalance in the force, if you will, right? They're worried about paying their bills that month. So,
And customers are fickle and
Of
will go
course.
and find another supplier.
of course they do.
Yeah.
Exactly.
So to me, that's the. I mean,
There-
because we've talked about it a lot.
No, there's a power in being able to deliver a worry-free environment to these operators, right?
Yeah.
There's really an elegance to it that we think they're going to find. We already know on to smaller companies find it absolutely irresistible. But if you-
Reliable SLAs and et
yeah,
cetera,
and the larger companies have even more at stake. So we
Yeah.
think the same will be the case. They're not as price sensitive; they can buy this stuff, but to have it just run by, like
it's just got to run. It's just
like
got to
not
run.
doing your own taxes, right?
Yeah.
Okay, so you can talk to Ken because he has the inside dope on how this works, the further details.
If you have any curiosity whatsoever on how you make 100% or more on your money per year, I know you don't, but if you do,
If you're an existing investor, you could. If you're a new investor, then it's, as high as 94%. But remember, this will be cut in half soon. We cannot run these bonuses for long.
right.
So talk to Ken, see what it's all about. So is this for real? I mean, are we insane or no? I know that this is the result of a lot of really, really hard work, amazing hard work, and we're continuing to push hard on it. And we will have a tax benefited water fund soon, and that will start to transform the water industry.
And folks, it's okay if you go, this can't be real. Call me anyway. I will lay it out for you. All right. And when you leave the conversation, what you do, I don't know what you'll do, but you'll know at least it's real. Okay.
Wonderful. Well, I want to thank everyone for joining us. It's been informative and a new format of sort of commenting as we go. We'll be refining that, but you can count on us to have a lot of detail and deep dives in these briefings once a month. And believe me, next month, there's going to be a vast number of updates. Those little soon are going to start being check marks. So be sure to tune in next month. It will be in August, and that is the 21st of August. Thursday, the 21st of August, we'll be meeting again. Please be there, and I think you'll find it exciting and fascinating. Thank you, everyone.
Questions, just put them in the chat.
Put them, go ahead and put the questions in the chat. And even better yet, this is now still goes to the same, but we're very proud to let you know that we have a .com. So it's offer.waterondemand.com and invest@waterondemand.com. They both work, but we're very proud of that. Thank you all, and you have a great weekend, and see you again on the 21st of August at 8 p.m. Eastern.
Good night.
All right. See you, everybody.